It's a Matter of Insurance, presented by the New Hampshire Insurance Department. The New Hampshire Insurance Department is a state agency that regulates the commercial insurance industry in New Hampshire. Have questions or need assistance with your coverage? Call our Consumer Services Division at 1-800-852-3416 or email consumerservices@ins.nh.gov. Learn more about us by visiting nh.gov/insurance. A Matter of Insurance is a new monthly podcast that aims to provide important resources to consumers, tell stories from our Consumer Services Division, discuss the work of our enforcement and fraud departments, and promote the insurance industry in the state of New Hampshire. Has someone you know passed away but you were unsure if there was an active life insurance policy? The National Association of Insurance Commissioners, commonly referred to as the NAIC, has a tool for that called the Life Insurance Policy Locator service. Let's learn more about it from our Consumer Services Director, Keith Nyhan.
This is a tool which in concept began back in 2014 when the New Hampshire Insurance Department partnered with the National Association of Insurance Commissioners to develop a tool that would assist New Hampshire beneficiaries locate life insurance policies and annuity contracts of deceased loved ones. Who can submit a request? Well, in short, an executor or a legal representative or estate, or anyone who believes that he or she may be a beneficiary of an annuity contract or a life insurance policy. In concept, this project began when the insurance department received, and frequently still does, receive phone calls from individuals who say, hey, geez, my father passed away recently and I can't find his life insurance policy, but I know he had one. Well, this is the tool for you. Essentially, by going to the New Hampshire Insurance Department's website, nh.gov/insurance, you can go to the Consumer Services page and hot link on our webpage, which will redirect you to the NAIC's Life Insurance Policy Locator tool. That website is naic.org. Search the consumer page and there you'll find also a link to the tool. This tool functions in such a way that individuals who input critical information about their deceased loved ones, such as name, social security number, date of birth, date of death, last known address, etc., at which point the NAIC aggregates that data and submits it out to basically 95% of all insurance companies who have written premium in the United States. And those companies will search all of their records in an attempt to locate a tool for that deceased loved one. If a policy is located, the insurance company will actually issue a claim kit to the beneficiary of record on file. Just note that if you're not the beneficiary of record, you will not be notified. And that's a safeguard to protect these policies from individuals who may be fraudulently trying to obtain them. Once an individual is notified that a policy exists through a notification from the company, that will be accompanied by a claim kit, at which point the beneficiary can submit all appropriate documentation and the insurance company can then initiate a claim payout.
The New Hampshire Insurance Department's enforcement unit assists the department in meeting its mission of promoting and protecting the public good by ensuring the existence of a safe and competitive insurance marketplace through the enforcement of New Hampshire's insurance laws and rules. The enforcement unit does this by conducting investigations and taking administrative action against persons or entities licensed or authorized to do business in New Hampshire, which have violated New Hampshire law. Compliance and Enforcement Counsel Joshua Hilliard joins the podcast to talk about lawsuits against Healthcare Sharing Ministries.
I have what I think is one of the best jobs here at the department. I get to look into potential misconduct, unlawful conduct on the part of either carriers or insurance agents, insurance producers as we call them. And what I'd like to do is tell you about one of the more interesting cases we had over the last 2 years, which involved an entity that some of our listeners may be familiar with, which is Alera or Trinity. They're a healthcare sharing ministry. They're currently in bankruptcy right now, but the action here at the department predated that by a number of years. If you think back about 12 years ago to when the Affordable Care Act was passed, there was at that time a tax penalty if you didn't have insurance. And there was concern because there are, alternatives to insurance that are out there. And one of them at the time was relatively minor, but existed, something called a Healthcare Sharing Ministry, which is just an organization of like-minded people that pool their resources to help out one another. John Smith breaks his leg. He sends it in that he has a hospital bill for $10,000, and then everyone in the organization gets a letter saying John Smith broke his leg. Can you send him $100 to help him with that bill? Many states across the country passed legislation to help protect these, including New Hampshire. We have a statute, RSA 126V, that is a safe harbor statute for these sorts of organizations. Now, it requires that these organizations meet a number of these parts of the statute in order to be recognized as a healthcare sharing ministry. They include that the ministry must act as a facilitator amongst the groups of people that are working together to offset these healthcare expenses. They must allow members to remain a member even if they're later diagnosed with an illness. They can't just boot you out. They have to have yearly audits. They need to provide monthly statements to members. And one of the biggest sticking points has been they need to have been continuously sharing expenses amongst their members since December 31st of 1999. As to why that date in particular, I can't tell you why that date is so important, but I'll tell you why they put it in is because the drafters recognized that by allowing these organizations sort of recognition, and importantly, by allowing them to act as a healthcare expense or a healthcare organization for people and offset that tax penalty that was placed in the ACA, they didn't want these proliferating across and just undercutting sort of the purpose of the ACA, which is to get a bunch of people across the country on these policies in order to share that risk, right? They tend to be, I'm not going to say they all are, but they tend to be organizations centered around particular faiths, like the Anabaptists or some in like Pennsylvania, the Amish, communities like that are a little more insular, depend on one another for these sorts of expenses. After the ACA passes and people realize this is an exception where you're not going to be faced that tax penalty, people see a business opportunity and that they can enter that sphere, offer what is in many ways, a lower cost. Their advertising is a lower cost premium, if you will, than what you would be charged, like for instance, on the healthcare exchange to get health insurance. And then you don't have to pay that tax penalty. So these really start cropping up. And one in particular did, and it was the Alera Trinity. They began in 2015, so about 5 years after the ACA is passed and 3 years after the statute here in New Hampshire is passed, 126V. And it began as an offshoot of an Anabaptist healthcare sharing ministry, which again, as far as we can tell, appears to be a legitimate healthcare sharing ministry. And this man comes in and says, hey, listen, I want to partner with you and work to market this across the country and get people involved. And so they begin doing that. They work as Alera for a time, and then they rebrand and kind of create an offshoot called Trinity, where Alera is still doing sort of a third-party management. They're, administering the claims and things like that, while Trinity's selling this healthcare sharing ministry. Of course, the first thing that goes up, right, is, well, this entity clearly hasn't been in existence since December 31st, 1999. But the exception to that requirement is if there's a predecessor organization. So by latching on to this Anabaptist sharing, they were claiming that was a predecessor organization that had been sharing since December 31st, 1999. Now, these may work well for some people, these healthcare sharing ministries. The concern are the fact that there's much less controls over what is required of these entities in terms of what they cover. For instance, when you sign up for a regular major medical health insurance, right, there's a large contract that defines what they must cover. And there's many things that the ACA requires that they cover. Cover your healthcare expenses. Of course, there's always exceptions and there's hoops you have to jump through. And I'm sure a lot of people can have legitimate complaints about that. But on the whole, they're supposed to cover, your healthcare expenses. The things with these healthcare sharing ministries is there's no rules like that in place. They are, in a way, free to, accept or deny claims sort of as they see fit. And what's different about these organizations that have cropped up in the recent years, including Alera and Trinity, is that they weren't really facilitating the sharing of expenses. Like I had initially explained to you, they weren't saying, oh, Joe Smith broke his leg, can everyone send him $100? What they're doing is just saying, we're going to charge you $400 a month and then send your claims to us and we'll pay what we want to pay. And that's the big concern, because when the ACA was passed, one of the requirements were that any major medical health insurers, they have a what's called a medical loss ratio of either 80 or 85%. You might even heard of it as the 80-20 rule. That means that 80 cents out of every dollar that they take in premiums, they must spend on healthcare expenses for their members. There's no rule like that for a healthcare sharing ministry. And in this case, in Alera and Trinity, it was actually flipped. They were spending only about 20 cents of every dollar on claims. That other 80 cents was really just getting absorbed into these TPAs and subsidiary companies, all started by this same family that was controlling Alera and Trinity, frankly, just to enrich them, as far as we can tell. We took action here at the department about 2020, began an administrative action against Alera and Trinity, And they responded very forcefully by actually filing suit against the department. And then we were embroiled in a lawsuit here in New Hampshire in the superior courts and arguing back and forth. They were claiming that the department was discriminating against them because of their religious beliefs. I will assert to this day that that was not the case. We were taking action given that we did not see that they were in compliance with the 126V, that safe harbor statute. But we had litigation in the Superior Court for over a year, going back and forth, issues with discovery and motion practice. Actually, some of it was escalated to the Supreme Court here in New Hampshire, given some of the arguments that were taking place. And we were actually briefing before the Supreme Court when the entities filed for bankruptcy, both Trinity and Hilliard. Trinity began, and then Hilliard was sort of pulled into bankruptcy by some consumer groups. But both are now still ongoing in bankruptcy. And the concern is these entities have liabilities exceeding $300 million in terms of claims that they either said would be covered or claims that were submitted and they never responded to. And, last I checked, while they had liabilities in excess of $300 million, their assets were somewhere in the, like $1 to $5 million range. So in essence, throughout this bankruptcy, the persons who are most harmed were these people who paid in month by month. They're going to see pennies on their dollars, if that, in terms of any recovery at the end of the day, when they were expecting this entity to step up and provide them coverage when they were at their worst, when they needed that, incur those health cost expenses. So that's the real concern the department has. Again, some of these operate legitimately, and they can be a good work for, I would say, particularly more insular communities that have some connection and can share that risk. The concern is when they branch out and become much more commercialized, like you would expect an insurance plan to be, but then all those controls that are in place, all those guide rails that keep, in some ways, those insurance companies honest are not there for Healthcare Sharing Ministry, and it can leave people really bare. Insurance Department here has, of course, taken action against Locator, which unfortunately didn't result in much in terms of administrative sanctions against them, given the litigation we were involved in for a number of years, and then the dissolution of these through bankruptcy. However, we have taken action against some other healthcare sharing ministries. For instance, we've taken action against the Alliance for Shared Health, which we were able to enter into an agreement in which they agreed to leave the state, given that we did not see that they, again, met the requirements of our statute 126V, and fined them an appropriate amount. And we're currently involved with a healthcare sharing ministry that is very close to resolution. And there are some others that we have teed up, both in the market conduct team and enforcement, to likely take action against as well for the same concerns. We're going to look at them. If they comply with our statute, that's fine. They can operate in the state. If they don't, we're going to take action against them to protect New Hampshire consumers. And we have that poster child now to look at Hilliard Trinity as to what harm really can occur with these entities that are not nearly as well regulated as the insurance carriers are.
For the final segment of the inaugural edition of A Matter of Insurance, we are joined by Deputy Commissioner DJ Bettencourt to discuss the department's work in the legislature.
Well, thanks, AJ. So one of the things that we do at the department that I think is core to our mission is we go before the legislature to advocate for, and in some cases against, proposed legislation that we think would hurt our competitive marketplace and would undermine the key consumer protections in those tools that we have to protect consumers. It's been a very busy but productive month so far for us in the legislature. Now, I do have to admit that the bulk of the legislation that we're pursuing is technical in nature, but you still have to earn it with the legislature, and you can't take anything for granted. But one asset that we have here is the trust and credibility that our team has built up over many years with the legislature, and I'm very, very proud of that. When our team goes before the legislature, those individuals know that the information that they're getting is accurate and that they're a real credible resource to help our policymakers make the best decisions as it pertains to the regulatory environment of insurance in New Hampshire. And so as a result of that, we've had 3 bills that have already passed through our state Senate and a few that have already passed out of committee in the House of Representatives, and that's really fast. For our legislature. We're only about a month into their legislative session, and so we're very, very cautiously optimistic and pleased with how things have gone so far. But just as importantly, there were several pieces of legislation that, as I mentioned before, would undermine our free market competitive insurance markets here in the state, and fortunately, those bills have already been stopped, most of them, so they're not going forward. And that's important. Sometimes it's important to stop bad legislation from becoming law than to pass good legislation. And we're certainly never going to support anything that's going to undermine consumer protections here in New Hampshire. But on the proactive side, there are two important initiatives that I did want to highlight that the department is pursuing. And the first is a bill that would have the New Hampshire Insurance Department accept the delegated authority from the federal government to enforce the No Surprises Act. So just a little bit of background. New Hampshire has a great history of preventing surprise or balance medical bills. And that started in 2018 when the state passed legislation prohibiting out-of-network anesthesiologists, pathologists, radiologists, and emergency physicians from surprise billing a commercially insured patient when that care was provided at an in-network facility. But it was important to note that that law only provided protections to fully insured plans that are subject to state law and oversight by the New Hampshire Insurance Department. But building on those protections in 2018 and 2019 came the Federal No Surprises Act that extended those protections and ended the practice of surprise billing in most other aspects of commercial insurance. But importantly, it provided those protections to self-insured or ERISA plans. But following the passage of the No Surprises Act, the question became who would be responsible for its enforcement. And to the federal government's credit, they acknowledged and respected the long-standing principle that the regulation of insurance is a state function. So they provided states with the opportunity to accept as much of that enforcement authority as that state wanted to take on. And here in New Hampshire, we wanted to take on that authority because our department is prepared, willing, and capable of taking on those roles, and we can do it more effectively, faster, and cheaper than the federal government with no additional staff. And as I said, because we had those previous balance billing protections in state law, even before the No Surprises Act, we have a track record of success in how we do it. So we're hoping that the legislature will agree with us and give us the ability to enforce balance billing laws across the board, both those here at the state level and those that are now in place as a result of the No Surprises Act. The other one that I would quickly highlight is our bill to accept the NAIC, the National Association of Insurance Commissioners, model pet insurance law. Pet insurance is a relatively new product to market, but it is growing exponentially. And people are making the choice to buy and purchase pet insurance products. And so as that product becomes more prevalent in New Hampshire, we want to have those rules of the road in place so that the companies understand what they need to do to put good products on the market. And again, this department has the tools that it needs to protect consumers. The NAIC model law that we're looking to accept, as I said, has been vetted over a couple of years. It's gotten wide feedback from a whole range of stakeholders across the country. And so we're feeling pretty optimistic that the legislature will agree and we'll have some guardrails for pet insurance in state law here by the summer.
That was Deputy Commissioner DJ Bettencourt. Thank you for listening to the first edition of A Matter of Insurance presented by the New Hampshire Insurance Department. You can subscribe to the show on all major podcast platforms. Be sure to follow us on Twitter and Facebook, and always remember that we are here to help. If you have problems with your insurance, call the Consumer Services Unit at 1-800